As they say, the future is unknowable. All we can do is look at the past and try and decipher what happened on a certain given event and what were the effects, etc. And that is essentially what I'm trying to do here, not prophesize what lies ahead, but just look at the evidence because this has happened once before, right? Now, before we talk about what happened after the event, we have to look at what was the positioning like going into the event. So what I've done is I've just looked at, the S&P and the S&P downgrade in 2011, the Fitch downgrade, which is right now. This is 2011, that is 2023, the current one. And I have basically looked at what the Nifty, the S&P 500, the NASDAQ have done going into the event, right? So very eerily similar. The S&P downgrade in 2011 happened on the 5th of August, and this has happened on August 1st, right? I mean, so August seems to be the month of downgrades. Going into the event back then in 2011, that is December 31st, 2010 to August 5th, 2011. Actually, this is till August 4th because 5th the downgrade happened. Nifty was down 13% already before the event, right? The S&P 500 was down 4.6%. The NASDAQ was down about 3.6% or so. This year, it's completely different. Coming into this downgrade, the Nifty actually is up 9%. The S&P 500 is up 19%, and you've got the NASDAQ, which is actually up some 37% or so. So the market was weak coming into the 2011 downgrade by S&P. The market is super strong coming into the Fitch downgrade in 2023. Now let's look at what happened back in 2011, right? So this is the same. These are the same figures. The first column, what markets going into the S&P downgrade. But after the event on the 5th of August, what did the markets do over the next 1 month? I mean, actually, it's not exactly 1 month. It's the next low, basically. But it's coinciding between 25 and 30 days after the downgrade. So Nifty was down 13% already. It fell another 11% nearly. The S&P was down 5%. It fell another 6.5%. You had the NASDAQ, which was down 4%. It fell another 8.5% back in 2011. And hence, right, now that's obviously it's got to be a question mark because we don't know. The Nifty and the changes coming into this event, the S&P and NASDAQ sort of changes, very strong returns coming into the downgrade of Fitch over the next 1 month or so. Who knows? I mean, today, of course, we are down sharply, but what will we fill those figures up with a month down the line? We don't know. Views differ, and I'll tell you there are two distinct schools of thought. One is sort of trend watchers, right? I mean, people who watch the trend, and it's a very simple argument. They say the markets sold off in 2011 after the downgrade because they were already down. The trend was down. So the way the market treats news flow in an uptrend and downtrend is different. I mean, in an uptrend, perhaps markets look through it. We see it every day with earnings, etc., etc. And on the other hand, in a downtrend, if you get bad news, the sell-off gets exacerbated. That's the first way to look at things. The second is the more skeptical viewpoint, which is simply the fact that the markets have done very well. Let's move this graphics along. That markets have done very well. Just to give you an example, they've done so well that the BSE, the NSE Small Cap Index, has not even had a 5% pullback even once since the rally began from the lows of 2020. I mean, you could say the similar thing for Nifty. You could say, actually not for the Nifty, but you could say similar thing for other indices. And they say, well, this could be an excuse for a bit of a pullback. So that's two viewpoints. I would personally, if you ask me, I would lean towards the first argument, which is, the state that the market is in, that tends to often determine how it takes a certain news flow, positive or negative. So that's, just looking at historical 2011 downgrade to see what the markets have done and what we may do from here on.